Hi, everyone, and welcome back to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison.
Yes, welcome back, everybody. Gosh, we are getting very close to Christmas now, and you may have been following along on our socials. If you have on Instagram, you may have seen us put out a request recently for some questions that we were encouraging some of our followers to send in so that we could create a Q&A session on the podcast. And that is going to be the topic of discussion for today. So thank you to those people who do follow us on Instagram. If you are not already an Instagram follower, we encourage you to look us up on Instagram. Our handle is Streamline Property Buyers, very easy to find. And we do share a lot of valuable content through that platform. But for those that did see that Instagram story and responded, we have collated some of those questions to use in this podcast because it is an interesting way to really engage with our audience and ensure that we're capturing some feedback and also making the content that we share really relevant to some people in the audience.
My first question is, when is this weather going to cool down again? But the way it is in Brisbane at the moment, and I always like those little weather updates for people, the heat and the humidity is pretty bad at the moment in Brisbane. So early morning swims are actually not that refreshing at the moment. The pool's a bit warm. But yeah, it's definitely warm weather, and summer's hit us now here in beautiful, warm Brisbane.
You're not really selling it, Scott. Normally with your weather updates, you're boasting about how warm it is in winter. But yeah, in summer, when we do get these weeks where we have this very high humidity, it does become pretty sticky outside. So we are very thankful for air conditioning. And I'm sure for those that don't have fans and air conditioning in their homes, they are really feeling it at the moment throughout southeast Queensland because this heat wave is, it's quite a good one.
It's not that far to get to the water to freshen up anyway. So
that's true.
we have good access to the sunny coast, the Gold Coast, and surrounding areas. So you can make the most of it if you do live in Brisbane as well.
That's very true.
So jumping into some Q&A, so some questions that have come in, and it's always great. So thank you to people that have sent these questions in. Hopefully we can help out a bit. So first one I've got here is from Mark. Mark is from Mitchelton. So Mark has a home in Mitchelton in Brisbane. I know the market has had a lot of growth across Brisbane in recent years. I've heard I can use my own home to buy an investment property, but can you help explain how this is done?
It's a really good question. And first of all, thanks, Mark, for sending your question in. A lot of people really don't understand the power of the equity that they may have in properties that they already own. So if you have held property across most of Australia since COVID, you will have had an equity uplift. Of course, here in Brisbane, that equity uplift at a median value level would be in the vicinity of 60 to 70%. Now, what do I mean when I say an equity uplift? Basically, that is the difference between the value of your home today and the amount that you actually paid for your home or your property when you first purchased that property. So let's just use some round numbers. Say you purchased a property for $500,000 10 years ago, and that property is now worth $1.4 million, just as an example. You would have an equity uplift of $900,000 on that property. Now, when you're actually working with a mortgage broker or a bank, you can actually borrow off that equity. Now, what does that mean? You can use that equity to take out what we call an equity loan, and that will enable you to use that equity loan as collateral or rather as purchasing power for more property. If I was just to explain that, so say your $1.4 million property is now current value. And even if you still have a mortgage on the original property, and say that mortgage is down to $350,000, you can still potentially borrow up to 80% of the value of the current property. Now, that means you may already have a loan of $350,000, but there's going to be an additional amount that you have the potential to borrow. Now, of course, this is all dependent on serviceability. So just because the equity is there, it doesn't guarantee that the banks are going to lend you that money, because you do need to meet those lending requirements as well. But if you haven't yet explored how you can use equity that exists in any current properties that you own to purchase an investment property or build out a portfolio, I strongly encourage you to explore this option. So, Mark, I hope that has helped to explain in some sort of basic level of understanding what you need to do to tap into that equity and see if you can actually use that equity. I would just highly encourage you to seek out the assistance of a mortgage broker who will be able to help you to understand what your borrowing capacity is and whether you do have equity that's usable equity and whether you qualify to be able to take out a loan using that equity to assist in the purchase of more property. So hopefully that's been helpful.
As a starting point, is it something that people could actually do? I mean, obviously there's valuation, there's those types of things to understand the value of your home. I guess if people wanted to have a bit of an idea, you could look at realestate.com and have a look at the sold tab. Have a look at some properties in that area, similar size, similar bedrooms, that type of thing. See what they've sold for to give you an understanding of an approximately, roughly what your house might be worth, give or take a little bit, obviously, depending on the finishes and the quality of the property as well. But that gives you an idea roughly what your house is worth. You know what you bought it for. That gives you an idea of what the difference is. Okay, you'll then know what you owe on the property. Gives you a good starting block to actually say, okay, I'll go and talk to a broker and I'll get the ball rolling. They'll probably then have to organise valuations, or they might do it in-house depending on the brokers. And then that gets the ball rolling then to understand what that equity component is.
Yeah, it's a good point. And of course, there are some online calculators. And I know in the past we've talked about the accuracy and the validity of some of those automatic valuation calculators that are out there. But they are useful in this instance where you can provide a snapshot view of an equity position. So there's platforms like onthehouse.com.au where you can enter a property address and get an indication of the value of the property. Realestate.com.au will also provide an estimated value, current value of the property. As I said, the accuracy, it's not always spot on, but it does provide a bit of a snapshot view for you. And it is particularly useful in this situation where you may be looking to understand what is the equity position in your current properties so that you can so that you know that it's worthwhile starting that conversation with your broker. But of course, once you get to speak to a broker or your bank, they're going to want to verify the current value through a more formal process of valuation. And of course, they will be able to assist you with this. So there's a lot of people that don't track the market on a day-by-day basis or a week-by-week basis or month-by-month basis like we do when we are buyer's agents. And I know a lot of friends and family that are in my network, they're really not understanding just how much the market has moved. Everybody goes about their daily life, of course, and unless property is part of your daily life, it's just not something that people think about a lot. But there's a lot of untapped equity out there in the market right now. And for people that have the capacity to leverage that equity and they have goals in place to build wealth for the future, there may be a way that you can actually purchase an investment property without actually putting any cash into that transaction. And of course, this is the benefit of relying on the equity that may exist in your home. And just knowing the growth in Mitchelton in the last 4 or 5 years, Mark, if you have owned the property throughout that time, you will have a very strong equity position. And it's a really clever way to actually build out an investment portfolio without relying on your cash. It's a very tax effective way, especially if you're purchasing in your own names as well. Obviously, with current legislation, it does allow you to offset the costs associated with holding properties. And right now, especially here in Brisbane, we need more investment properties. So it's not that greedy landlord conversation. This is about supplying properties to tenants who can't afford to buy themselves. And if we have more landlords getting into the market, of course, that's going to potentially increase the supply of rental properties and put downward pressure on rents. So there's a lot of benefits, not just to the investor that may be looking to build their personal wealth, but also to society as a whole, because we actually need to provide more rental accommodation. And right now, the onus is on mum and dad investors because governments are not actually building any large projects that supply rental accommodation. So, Mark, if that's you and you can contribute in your small way because you have the capacity to do so, then tapping into that equity is a great place to start.
Yeah, it's a good way to build your wealth. And like I think someone like when we talk about Mark here at Mitchelton, It's, as you said, Mitchelton's grown a lot. It's that area in Mitchelton itself and your house that you've got now, your home, it's done the hard yards. Okay,
Absolutely.
so take advantage of that if you can, if that's what you want to do to build that wealth in your portfolio. Fantastic opportunity and a really good way to get that portfolio moving and growing by using the hard work that the market's done from your own home itself. Second one. So from Adelaide, Andrew from Adelaide, with interest rates expected to fall next year, hopefully, should I wait until that happens so I can borrow more, or should I buy now?
Oh, it's a very good question. And not one that's far from many property investors' minds or even home buyers for that, to say the least. I think that, when interest rates come down, of course, it does enable you to borrow more because it improves the capacity or the leverage that you have access to. However, you also need to consider the market that you are buying into. And this is where it gets a little bit more complex because right now there's some markets around Australia. And Andrew, if you're in Adelaide, Adelaide is one of those markets where property prices continue to increase month on month. So Adelaide, Perth, and Brisbane, these are the three markets where we are still seeing month on month price growth. And yet there's other markets around Australia where prices are actually stagnant or they're actually falling. So I would say the answer to your question depends on where you're looking to buy. Because if you're actually buying into a market where prices might be stagnant or falling, then it could be worthwhile holding out and waiting if the intent is to borrow more, and you will have the capacity to do so if interest rates come down. However, if you're buying into a market that is continually showing upward price pressure or month-on-month price growth, it may actually be better to get into that market because the sheer act of waiting could mean that what you can afford today is going to be actually the same or less than what you might be able to afford when interest rates finally do come down. That is, if they do, because if you're relying on that interest rate to come down to give you more borrowing capacity, and in that time the market shifts more than the additional borrowing power that you'll have, then it defeats the exercise. Does that make sense?
I did a very, very quick exercise because I read this one before we started to record. And I just threw some simple round numbers into this. Now, I don't think there'll be a drop. I don't think there'll be much change in interest rates at all until probably another 6 months. With the federal
it out there,
with the
Scott.
with the federal election happening, I don't think there'll be much change. Could be, but if you just say, for example, nothing happens for 6 months, and you outlay $1 million for a house at the rate that the housing market went up in Brisbane last month, which was 0.6%. That's $36,000. Okay. So that's just some round numbers just to give you an idea. And that's where Melinda's talking about that understanding the market. That's what I'm sort of saying here. Throw in some round numbers, get an idea of what the difference will be in your interest rate to what the market could be. And it's hard to predict. We look at predictions, and on the boom and bust report that came out, what was that for Brisbane?
9 to 14% growth based on the most likely scenario in terms of interest rate movements. So, that's very different to other capital city markets. Some markets are showing negative growth. Other markets are showing positive growth. So this is why it's important to understand the market that you're looking to buy into, because if it is Brisbane, the projection is still for positive price growth. And we don't disagree with that projection based on what we are seeing in terms of the fundamentals of supply and demand in our market across Brisbane. So if you are waiting to improve your borrowing capacity, be very cognizant of the fact that some markets will continue to grow and you may be therefore priced out of those markets even with the same dollar value, whereas other markets that may be more stagnant or in fact falling, there might be more opportunity if you are waiting to buy in those markets. So always good to get some local knowledge in terms of what's actually happening in certain markets on the ground, because that's going to determine the direction of the market as well.
Yep. Third one, this one actually taps in a little bit. It'll probably follow on a little bit before we started to talk about there. So Sarah from Melbourne has said there's a lot of media headlines about property prices falling again in Australia. Is it still a good time to be investing in Brisbane? Now, this touches on a little bit, I think, with what we started to touch on in the last question. In the case of property prices increasing and moving and things like that, is it a good time to buy? Look, I think personally, if you can afford to get into a market, get into a market. I'm never about short-term gains. I'm about long-term plays in property, and that's where I think you make most of your money when you actually look at your wealth and your long-term goals, not just, oh, what am I going to make in 6 months or 12 months? If you look at more of a 5 or a 10-year plan and play it over that way, this will answer some of those questions. The last one, sorry, was Andrew. When we talk about the interest rates, and then now when we're talking to Sarah about the headlines for is it a good time now? And it's if you can afford to get into the market, I think it's a good time because that long-term play is where you're going to make the money.
And the question from Sarah was specifically targeted as in terms of Brisbane. Is it a good time to be investing in Brisbane? Look, the forecast for Brisbane property price growth for 2025 are between 9 and 14%, according to SQM research. Based on what we're seeing, the fundamentals are still showing that we will have pressure on prices because demand is exceeding supply, and we're not seeing anything that's going to impact on supply that's significantly increased supply anytime soon. And unless there's some significant shift that causes the demand to dampen, that price pressure will continue to go, in my opinion. The media headlines, and this is something that we often unpack, when we hear big national news stories about the Australian property market, 9 times out of 10, the data is condensed to Sydney and Melbourne as the largest property markets. And these are the markets that are largely spoken about in national news headlines. And of course, right now, we are seeing both Sydney and Melbourne markets either stagnate or fall slightly in terms of those median values. Now, I have seen some headlines just in recent days and weeks about certain suburbs in Sydney and Melbourne having significant price falls, and this is based on median dwelling data for a 12-month period. Now, of course, median dwelling data does not tell the story of every property in a market, and that can be very much skewed because of very low volumes of sales. So you need to be super careful relying on suburb level median data trends, because generally the number of properties that fall into a suburb make it statistically insignificant when you're looking at those median trends over such a short period of time. That's something that's very important to keep in mind. So looking at larger areas, whether that's SA3 or SA4 levels or even SA2 levels, it's going to group more suburbs in together, and it's going to give you a more accurate snapshot because you're dealing with a larger data set. And that's my research and my research background coming into play to help answer that question. But looking at Sydney as a whole and Melbourne as a whole, and these are the Greater Sydney and Greater Melbourne areas, the prediction is for some small price falls in the next 12 months, whereas here in Brisbane, the predictions are still for price growth. And the reason for that is largely due to fundamentals. In Sydney and Melbourne, the listing volumes right now are above the long-term average for these cities, whereas here in Brisbane, we're still between 25 and 30% below. So that's the number of properties that are available for sale on the real estate portals, realestate.com.au or Domain. They are higher in the southern capital city markets. And yet demand, whether demand is heightened or not, it's the balance between that demand and supply that ultimately determines the direction of the market. Now, of course, here in Brisbane, we've had that very strong, robust demand for many, many months. We've had strong interstate migration, so population growth puts pressure on demand. We've got an extremely strong economy. We've got infrastructure projects that are pushing ahead. That's creating a lot of job opportunities for people relocating to Southeast Queensland and, of course, locals that already live here. So there's a lot of brightness, there's a lot of long-term stability, and there's a lot of demand pressure here in Brisbane and Southeast Queensland as a whole. And that's why we strongly believe that it's definitely still a good time to be investing in Brisbane, because even though prices in both the unit market and the house market are at record highs, We expect, based on the fundamentals, that it's also going to potentially be the lowest price point that we will see because the market is continuing to grow month on month. So that's just something to think about. Even though we're at record highs in terms of median values in dwellings, that's units and houses, it's also likely that we are also at the low point because prices continue to rise month on month.
You mentioned earlier on, Linda, when you said significant change, something significant to happen that could affect that. What exactly? I mean, give us an example of what that could be.
So in terms of supply changes, I mean, if we see this huge influx of new vendors wanting to sell, and that could come from affordability pressures and things like that, very unlikely. And
I can't see that really happening.
Correct. And I think that we've seen that interest rate cycle where interest rates were increasing month on month. That is where a lot of people were probably at risk of being forced sellers, but we haven't seen that play out at all here in Brisbane. So the other demand side impact that we could see, for example, if there was a significant world war, some big event that impacts us all as a nation, these are the sorts of things can impact on the demand side, and people would stop wanting to transact in property. These are the sorts of things that would cause a significant shift in demand. And again, I know there's a lot of instability out there at the moment, but we still have, a level of stability in the Australian market that's causing people to continue to transact in property.
So simply the biggest significant changes that could happen would be the changes between supply and demand.
Correct. Yes.
Okay. And when we look at that in Brisbane at the moment, as you've talked about, the demand is high. We're still seeing high migration. People want to live up here. I talk about it all the time. It's perfect up here in Brisbane. Why wouldn't you want to live here? The weather's great most of the year. It's affordable. It's livable. It's fantastic. People do want to move this way. I recently spent a week down in Sydney. So different, the lifestyles. It just feels more relaxed. And I think people, when they experience it up here, they understand what that's like. And then also, the supply side of it, it's not going to come because there's more people coming here. So
that's right.
When you talk about supply and demand, it's pretty simple. And I think, I agree. That's why I think it looks pretty rosy for Brisbane up here. And don't forget, we talk about it a lot. We'll talk about it for the next 8 years, whatever it is. We've still got the Olympic Games coming. So that will keep pressure on for a longer period of time, I believe, as well. And I think, Sarah, I think it's a good time to invest in Brisbane. The next question, I've been looking to buy for a few months now, and I've put in 4 offers on different homes, but I keep missing out. Do you have any advice on what I need to do differently? This is from Karina in Salisbury, and this is probably not uncommon. We hear this quite a lot. Again, we're back onto that supply demand side of it, where we talk about the amount of people that are actually putting offers in, and we're still seeing multi offers. We don't get a lot of price guide up here in Brisbane. I saw a young couple on the weekend at an auction. They were from Melbourne. And they come up and they said, "Oh, you don't get any price guide at all for an auction." I said, "No, we're not allowed to." So it's really tough for people buying property. And obviously for Karina, 4 offers, keeps missing out. What can she do?
Yeah, it's pretty tough. And just, extending upon what you just said, Scott, the young couple that we were chatting to at the auction on Saturday, they actually turned to us, the property passed in, and they said, "Oh, that seems really high for this particular property. What do you think?" And we said, "Well, it's probably, on the money in terms of, where it could transact, but the vendors obviously had expectations above where the active bidding got to." But it is a surprise to many people in other states that here in Queensland, there are no price guides provided when it comes to buying at auction. So if a property is listed for sale at auction, you really have to do your own research as a buyer to understand value. But we're seeing more and more, and in fact, it's commonplace now that properties are listed for sale on the big portals without a price. So it's very rare to see a property with a price online. And I think it's a consequence of the current market where there are more buyers than there are properties available for sale. So the supply is low and the demand is high. And so by listing without a price, agents leave it up to the market. That is, they leave it up to the buyers to determine what they're prepared to pay. Now, if you've continued to miss out, Karina, it's not uncommon. And in fact, it's probably one of the biggest frustrations that buyers actually have out there, especially when it happens more than once. a lot of the time people don't understand the importance of being ready to place clean offers. So if it is a multiple offer situation, clean offers are critical. And what do I mean by a clean offer? It means if you're subject to sale, obviously that's not going to be competitive against someone else who may have better terms. If you have requirements to obtain a finance approval after you enter a contract, having that finance approval in place will enable you to shorten the time frame that you put forward with that offer in terms of a finance clause. So instead of having 14 or 21 days, if you can make your offer subject to finance with only a 7-day clause, it's going to be more competitive against other offers that might have longer time frames. Having building and pest inspectors already in place and booked in will enable you to shorten any time frame required for building and pest inspections as well. So all of these terms matter a lot when you're placing offers. Understanding how your offer is going to appeal to a seller is critical as well. And of course, in our role as buyer's agents, it's our job to understand how to make the offer appealing to the seller. And that might come down to more flexible settlement timeframes, optional rent backs. There's a lot of ways that we can position offers that enable that seller to be attracted to our offer outside of price. So sometimes it's about understanding the seller's circumstances before you actually place your offer. And finally, of course, the reason that a lot of people keep missing out is just not understanding the market and not understanding the price that you need to pay. And I think this comes right back to the very first question when we were answering Mark's question from Mitchelton. The market has shifted so significantly in Brisbane over the last 4 or 5 years that a lot of people just don't understand where it's up to. And if you've been in the market looking even from 6 months ago through to today, the market has shifted a lot just in a 6-month period. So if you're looking at any properties that have transacted 3, 4, or 5 months ago, maybe they're no longer relevant comparable sales that you can rely upon to determine the value of today's properties that are selling. And it's really important to understand that because the cost of missing out can also be quite an impact to you as a property buyer as the months roll on, as prices continue to escalate. And, you know, we've seen some buyers and spoken to many buyers on weekends that are in exactly this situation. They're so frustrated because they've been in the market and eventually, we've seen it many times, buyers give up and they just think it's too hard. I'm not going to do it. Having the ability to position your offers competitively, keep your terms as clean as possible, and understand the price you need to pay. It's combining all of those factors that's going to ensure you place yourself in the best position to be successful under multiple offer.
Keep close to the agent, but keep in mind the agent is working for the seller.
That's right.
Okay, so yes, you want to keep close to the agent. You don't want to give away too much. You don't want to tell too, but you still want to have a close I mean, this is what we do. Our job is to have good agent relationships, and our clients benefit from that. But yeah, you just want to keep the agent, but don't forget the agent works for the seller. That's who's paying the selling agent as well. So hopefully that helps, Karina, and you can find that property you're looking for as well. Another one here from Stu from Hamilton. I'm helping my daughter buy a townhouse, and I'm seeing a lot more sellers a lot more selling by auction. What advice do you have to help me prepare for the right one when the right one comes along?
Wow. Funnily enough,
the emotional father.
We've seen this multiple times. And in fact, we were actually representing a client at auction a couple of weekends ago. And the person who ended up purchasing that property was a father that was bidding on behalf of their daughter. It wasn't our client. And in fact, the price that was paid was well above the top end of our objective appraisal range. So we've talked a bit on our podcast about pricing property objectively, which comes down to what the property should sell for based on the most recent comparable sales or replacement value, multiple ways to put a price on a property. But there's always going to be that emotional premium that some people will pay for a property. And there's no other time where that emotional premium, in my opinion, is greater than when a father is bidding on behalf of their daughter. So, Stu, if you are in that situation, agents know that you are representing your daughter, they will actually be all over you. They will actually smother you. They will draw out that emotional premium to get the best possible price for their vendor, and you may not even know that this is happening. I know in the example that I just used, where the father was bidding on behalf of the daughter at an auction, there were 3 agents surrounding that father and daughter, and they were all talking throughout the auction to that particular bidder, distracting him, obviously encouraging him to bid strongly, and tapping into the emotional premium that he was obviously prepared to pay. He obviously had the budget. Did he need to keep going? That's the questionable thing, because obviously he was going to pay whatever it took based on what we saw.
Yeah, I think Stu, you have to set your boundaries, set your goals, and have a line in the sand, basically, to say that's it. If it goes above that, I'm happy to move on. And you have to actually have that beforehand. Stick to your plan, and just be prepared that you will probably have a target on your back and on your front. And they will probably, when we go to auctions, it's very, very rare that an agent will come up and get in our ear, because they know we're professional and we're there to do our job. We don't get that emotional side of it on it, like a father would on these. We understand that. So yeah, I think just stick to your guns, be prepared, be organized, and then just be confident to say, yep, like, I'm here or I'm not. Leave me alone. I can do it my way. So.
I think also just perhaps don't stand right next to your daughter on auction day. Be separate, because, those conversations can be seen by the auctioneer and also by agents. So I would encourage that separation at auction. And look, if you still not sure, if you're still not confident, engage a professional to represent you, because they will be non-emotional. They will work under your instructions, but they won't be swayed by the emotion on auction day. And it's a highly anxiety producing experience when you're at auction. And I can't imagine how much more emotional it would be if you were bidding for a family member. I've got 3 boys, a 21-year-old adult son. If I was bidding for him at auction, I know that my clear thinking would be skewed by the emotional outcome that I was hoping for. I think we all have that as parents. So it's important that if you have the ability to separate yourself from that emotional connection on auction day, that's going to enable you to be more objective in the decisions that you are making. That's my main advice. As Scott's pointed out, have a clear limit in mind, ask for space if the agents are actually talking to you, and separate yourself from your daughter on auction day. And if all else fails, hire a professional to come in and represent you on auction day. Buyers agents do offer professional bidding as a single package. So you do have the ability just to engage someone to come and bid on your behalf. Now, generally the cost far outweighs the additional payment you'll make on auction day to secure a property because of that emotional premium. So even if you've got deep pockets, a buyer's agent generally will bid non-emotionally to keep that price lower.
Yep. Last question. We'll get one more in before we wrap things up. This one comes from Townsville, from Steve in Townsville. I'm moving to Brisbane for work. The humidity might be less down here than in Townsville, Steve. Moving to Brisbane to work for a few months' time, wondering if I should rent or buy. My goal is to buy a home for my family, but the transition is proving difficult. Any advice?
Oh, it's a really hard one, and I'm conscious of time. I think there's a bit of time that would go into advising someone like Steve, especially if they were working with us, because the question needs to be asked, do you understand Brisbane? Do you know where you want to live? Because if the answer is no, then I'd highly recommend try renting first, because once you buy, the transaction costs are high if you haven't bought the right location for you and your family. So, of course, right now in Brisbane, the rental market is extremely tight. So that's hard even to secure a rental property, especially if you don't have rental history. However, if you can secure a rental property for a 6-month period, perhaps that's going to enable you to explore Brisbane and understand the locations before you commit to a purchase. Alternatively, knowing that the market is continuing to grow in value, I think it's equally important that you consider the option of buying into the location if you already know Brisbane and you already know where you want to live. If you don't, there's obviously ways that you can learn very quickly by partnering with professionals that can help you understand certain suburbs and lifestyles and school catchment zones that will appeal to your family. But if you don't have the time to invest in understanding locations up front, it's probably better to rent before you buy. But if you do have the time or you already understand suburbs, given the market growth, if you are prepared to get into the market sooner, it could be an option to buy because it will be more expensive, in my opinion, 6 months from now, given the rate of market movement that we are experiencing.
I'll give Steve a couple of tips here. Do your research. As Melinda touched on a few times, we might overlap a little bit here, but understand the schools, the lifestyle, the transport, the size of the land, the types of homes. Have a look on realestate.com for the sold tab again, see what's sold. Get a bit of an understanding of that, keep in mind market growth. The other thing that we did, and I'll give you just an example we did with a client of ours. These guys were actually from overseas looking to relocate over here. They came out here, we jumped in the car and we took them for a drive around. Okay, we went and had a coffee with them. We showed them some areas which they liked. They knew they wanted to be, for example, they know their kids were going to go to a certain school. They knew they wanted to be here. So if it was north side, they didn't want to drive over the bridge in more traffic. So we said, let's focus on these areas. We drove them around. A good example on this, we're sitting down having a cup of coffee in a beautiful location, great suburb. I'm not going to mention it. And the lady said they've got a young girl. They've also she's going to have another baby soon. She didn't want to be walking up and down hills with the pram. And we went, okay, let's rule this suburb out because there's a lot of hills in the area. You want to get an area that's a little bit flatter and you can get to the coffee shops and those lifestyles that she was talking about. Okay. That's knowing a suburb and knowing the local areas. Okay. That's the sort of thing we do, is that we can say to people, hey, we'll show you around. We'll drive around for half a day and we'll give you an understanding of what the coffee shops are, where the restaurants are, where the parks are, where you can take the kids to play, and how you will actually live in that area. And we can point out this is the transport and this is how you get around. That's how you get to know it. If you haven't got the time for that, that's the ideal situation, is to get to know where you're going to live. Because once you buy there, you'll probably live there for 10 years, thereabouts. Okay. Yep. So you want to make sure it's the right selection and the right location when you're picking that home.
Gee, Scott, I'm glad we only picked 6 of the questions. Yeah. I think we've definitely gone over time today, but we hope that those that have sent their questions in that we've been able to answer are pleased that we've touched on those. Sorry for anyone else that hasn't had their question read out in today's episode. We may plan another Q&A for the balance of those questions in the future. But if you do follow us on Instagram, as I said, Streamline Property Buyers is the handle. Look out for the times that we are calling out for podcast Q&A content, because we're very happy to answer questions and really take a deep dive into some of the topics that you, our audience, are most interested in.
Perfect. Hopefully that helped everyone that answered. And yeah, thanks again for sending questions in. If you do have any more, shoot them in. We'll collect them all up and we'll go again. So as usual, I'll let Melinda wrap it up. I know we've gone over time, so I'll let Melinda wrap things up as I normally do. From myself, take care and we'll talk again next week. Thanks very much. Bye for now.
Yes, thanks once again for joining us on the Brisbane Property Podcast. We hope you have enjoyed this episode. And if you have, we would love for you to leave us a review and share the episode with friends and family, because it does help others to find this content and learn from the information that we share. We hope you have a wonderful week and we look forward to speaking with you again soon. Bye for now.